Hello everyone, my name is Rees Akhtar. I'm partner at RA Accountants. The firm specializes in healthcare, franchise, crypto, landlord and owner-managed businesses. Welcome to our video channel. Today, I have invited Stephen Virondis, our head of tax, to talk to us about the forthcoming changes which affect many landlords up and down the country. Good morning, Stephen.
Thank you very much.
Thank you for joining us today. Making tax digital. It has been a theme of the year now, nearly. So tell us, what does it mean and what does it mean for clients up and down the country?
Okay, so if you're a landlord earning more than £50,000 a year in property income, then there are some major tax changes coming your way. And you just have over a year to prepare for them. So I'm here to explain what making tax digital is and how RA accountants can assist you in compliance.
Just tell us the timeline. When does it start? When does it kick off, really?
Okay, so making tax digital is HMRC's initiative to modernize the tax system. Okay, so from April 2026, landlords and self-employed individuals will have to move from the annual self-assessment regime to the quarterly digital reporting. So assessment returns are as follows. So from April 2026, those with qualifying income of more than £50,000 are within the MTD regime from that date onwards. If their qualifying income is more than £30,000, they will be within the MTD regime from April 2027. And then those with qualifying income of more than £20,000, they are within the MTD regime from April 2028. So for the avoidance of doubt, qualifying income means gross rental income plus self-employment income before deducting any expenses.
Just give us some examples then for the helping the audience there.
Let's say Sarah, she earns £60,000 from rental properties. So as her qualifying income is more than £50,000, she will be within the MTD regime from April 2026. Another example, let's say Mark earns £35,000 from rental income and £20,000 from self-employment income, so let's say from freelance work. His combined annual income is £55,000.
Yeah.
As this is more than £50,000, he is required from April 2026 to comply within MTD. Let's say Lisa has property income of £45,000, but no other business income. Because her qualifying income is lower than the £50,000 threshold, but it's greater than the £30,000 threshold, she will be within the MTD regime from April 2027, not April 2026.
Thanks, Stephen. It seemed obviously complicated and it's going to affect many people, many landlords. But what should they be doing?
We suggest there's a number of things that landlords should be thinking about in advance. So the first thing is digital record keeping. So you must keep all your rental income and expenses records in MTD compatible software. So spreadsheets alone are not enough unless they are part of the software or the compatible software package. The second thing is that quarterly updates. So instead of submitting your annual return, as is currently the case, then you need to submit quarterly updates, or returns as they're called, showing your income and expenses for each quarter. So the deadlines and the periods are as follows. So the first quarter of the tax year starts from the 6th of April to the 5th of July. That needs to be submitted by the 7th of August.
So you get a 1 month after the end.
In essence, yes.
Yeah.
Okay. The second quarter starts the 6th of July and ends on the 5th of October.
Yeah.
That needs to be submitted by the 7th of November. So on and so forth. So it is important to have digital records that they are up to date and they are with MTD compatible software. Once those 4 quarters are submitted, then a final declaration is submitted to HMRC by the 31st of January following the tax year. This would be done through the MTD compatible software as opposed to the traditional self-assessment system. Now, at this point, you'll have the opportunity to disclose or declare your other income, the non-MTD income. For example, you may have salary, you may have dividends, you may have bank interest, you may have capital gains and losses that you wish to declare, so on and so forth.
It's for the avoidance of the doubt, it's not filing your full set of accounts every quarter. I believe there are some simplifications that have been given through the forthcoming regime. So just tell us a bit about them.
Okay, you're right. It can seem a bit daunting, but there are some easements and simplifications that HMRC have published. The first one is if your turnover is less than £90,000 a year, in other words, below the VAT registration threshold, you can simply report your total income and your total expenses each quarter, as opposed to reporting each individual source of income and expenses. You still need to keep a record of your individual expenses and income. It's just that you don't need to categorize each one for each quarter. The next one is if you have jointly owned property. So if you own property with at least one other individual, you can enter a single figure for income or your share of the income each quarter. And then in the quarter 4, you can declare all your expenses in that quarter for the whole year.
Thank you, Stephen. As we have seen over the past few years, every legislation or change which comes from HMRC does have obviously the non-compliant regime attached. If you don't file on time or if you're not compliant, there generally are some penalties. So,
Are there in this regime as well?
There are. So just before I forget, the quarterly payments are not required in terms of tax. So for example, at the moment, you pay your tax twice a year, January and then July,
yes.
January and July. But that's not going to change under NTD. That will remain as January and July. It's just the quarterly reporting is carried out rather than once a year. Okay, so to answer your question, there are some penalties, unfortunately, for non-compliance. So HMRC, they have published the following. So there is a points-based system for late quarterly submissions. Once you have reached your points threshold, then there are financial penalties once you cross that.
It sounds like a driver's license. So if you get 3 points, then
that's exactly what I was thinking. You're absolutely right. Yes. There's up to £3,000 per quarter as well for not keeping digital records.
Yeah.
Plus, there's enhanced late payment penalties to encourage timely payments of tax. There is, however, there's a testing phase available where the late quarterly updates or the penalties for the late quarterly updates don't apply. So this gives you a chance to practice without any risk.
And I understand, I think your team have actually done a few of those tests with some clients as well. How are they going?
So far, so good. There have been a few teething issues, as you would expect.
Yes.
But in the main, it's running fairly smoothly.
What you advise landlords now, or people who are affected with this, not just landlords, to do in between now and until this April 26th?
We recommend the following. So the first thing is you calculate your qualifying income to see if you are within or likely to be within the regime. So review your 24-25 tax return, because this is what HMRC would be looking at in the first instance, to see if your qualifying income is above the £50,000 threshold. If it is, then you're likely to be within the MTD regime from April 2026. The next thing is choose your MTD compatible software. Start researching and testing the various softwares. Popular choices include QuickBooks, Xero, Free Agent. The next thing is to digitize or start digitizing your records. So start that immediately, even if you're not mandated to do so immediately. This will get you used to the process, so that any surprises are minimized when you actually have to comply with it. Consider professional help. The transition affects how you work with your accountant. Quarterly reporting does mean more regular engagement with your accountant. We're more than happy to help here, RA, as we have been doing for our pilot clients.
Thank you, Stephen. Viewers, I just want to say here, the long gone the days when you would give your accounting records, bank statements to an accountant a few months after the end of the year and say, prepare your tax return and your relevant accounts and advise you on this. The way the technology has moved and way the tax authorities have adopted the technology, you have no choice but to comply with this new digital regime and making tax digital that is upon us now. So yes, I would recommend to start looking now your accounting system, accounting records, how you keep your receipts, your filing, and so on. So now is the time to get them digitized, get them onto the softwares that you will choose. As Stephen, I've already mentioned that quite a few of them are out there who are compatible and compliant and assist you in those record keeping. Thank you, Stephen. Stephen, just coming back to any last comments, helpful guidance for our clients.
Yes, so making tax digital does represent the biggest change to property tax compliance in decades. So please don't wait until April 2026, start preparing now. So at RA Accountants, as mentioned earlier, we're helping landlords navigate this transition smoothly. We can help you choose the right software, set up your digital systems, and ensure that you're fully compliant from day one. So please don't hesitate to contact us.
Thank you, Stephen, for your valuable input. Thank you, viewers, for joining us today. If you are affected from the making tax digital, please get in touch, RA Accountants, and be more than happy to give you without charge consultation and welcome you to join RA family. Hope to see you in the next video. Thank you.